All right, here's the review for today's lesson, the MACD line. It tells you when something's happening right now. The signal line tells you about momentum because if the MACD is doing the same thing right now that it was doing a little while ago, there's no momentum. The signal line watches the MACD line and it gives you a visual demonstration when the MACD is on the move or when the MACD is just doing the same thing that it was doing before. So it gives you a bar graph to demonstrate momentum when the MACD line gaps away from the signal line. The histogram tells you when momentum is building, and remember, it builds from zero. Shrinking back to zero is not momentum. Momentum always builds from zero, so don't confuse the two. One is got a bunch of energy to push the market forward, and the other, all it means is we have that energy dissipating out of the market, and it might mean that we have a new direction coming, or it could just be consolidation. It could be a lot of different things, but it's not momentum, and so it's a really useful to be able to know the difference. The zero level tells you everything. MACD line above zero tells you that the overall direction in the market is up. MACD line below zero tells you that overall direction in the market is down. And when histogram bars are flat to zero, it's full of potential. It's like a spring that's been compressed and ready to push out a new wave of momentum as soon as decision comes back into the market. When direction leads momentum, that is, the MACD line is ahead of those histogram bars, you have a good bet for your trade when it comes to timing, direction, and momentum. Zero can be a slippery slope, but that doesn't change the fact that it's where all the potential is. So be ready to follow your MACD. Don't fall asleep while it's laying there on the zero level, going sideways for a length of time. Really, that's when you should be paying the most attention and getting some trades ready to go, whether it's pending orders or using the button to automate the move as soon as it happens. Because, I mean, it could be soon, it could be a long time, right? But MACD line is direction. Those histogram bars are momentum. And when you get momentum pushing behind direction, you get a good bet for your trade. Sometimes that means waiting to open a hopper until the MACD line goes a little farther than zero, and that's called a buffer. The buffer is a hopper strategy that is going to increase your chances of success. All right, so that's the MACD. Now you know. When you know how the MACD works, you trade better. You can't stop yourself. It's just a fact of the matter. And I'm anxious to hear how that goes for you. Coming up next time, we're going to be adding expectations about when momentum might show up based on price action. Can two moving averages give you an expectation about momentum? Yes, they can. And I'm going to share that with you in our next lesson. So I will see you on Monday evening.